please welcome on stage Philippe from DriveQuant, Soren from Finabro, Raphael from Moment, and Tanguy from Descartes Underwriting. Maybe we will start with a few words about your company, and mainly what kind of product. If you could share any KPI or at least where you are, let's say, operating from and on which market you are available. Tanguy, maybe to start with.
Sure. Thank you, Florian. So Descartes Underwriting is a new insurtech company. We are really focusing on innovative solutions in the face of climate change. So as most of you know, there is a sharp increase in the frequency of weather anomalies. So we need to come up with innovative solutions, that will provide a quick payout to our clients, that will be transparent, that will be more affordable. So we're working on it through satellite imagery and IoT, and we use AI techniques like machine learning and image recognition to do that. We are focusing really on the large corporations, governments, so the upper end segment. We are backed by large risk carriers, so we are acting as an MGA, so we underwrite on behalf of 9 big risk carriers, and we generate around 1 million premiums per month, and the target is to reach 2 million by the end of the year.
Okay, thanks. A few words about yourself.
So my name is Soren. Finabro is an Austrian-based company. I'm a Danish national, but I met my Austrian wife in Paris at school 15 years ago, so there's a Paris connection. Do you hear me? Yeah. So Finabro is a pension distribution platform. So when you come from Denmark, which is probably the best pension country in the world, or at least in Europe, and see the state of affairs in Germany and Austria, you get a little bit shocked. And that's kind of the background behind. So what we do is we work together with the brokers and the insurance industry, very similar to what We Group just told us before. So basically in corporate pension, it's all about the broker winning the company and afterwards winning the employees in certain markets. And we're basically the digital platform who partners up with the broker in this whole range. So we go from helping the broker, running everything on the company side, marketing, automation, campaigns, digital advice, and all of the background with insurance company. So we are based in Austria, we are active in Austria and Germany. We're kind of at the point we're done with our proof of concept. We have partnership agreements with Austria's largest insurance company and largest brokers, and a little bit more than that. So we are currently in the process of scaling in Austria and entering into Germany.
Thanks. Raphael, a few words about Moment.
Yes, hi. So our ambition at Moment is to support SMEs with probably what's their biggest pain point today, the cash flow problem. And we're doing this by offering an invoice-based insurance against late payments, focusing very specifically on that problem that other players are trying to address through a financing or credit product. And so we're approaching this in a very monoliner risk management aspect by offering this very simple, no commitment and transparent offer on invoices. And we've officially launched after a beta program in October, and we're getting a pretty interesting traction in a couple of months. We've insured €1 million in December, and I mean we hope this we keep the growth on and that traction in the coming month.
Thanks, Philippe. A few words about DriveQuant.
So DriveQuant, we are a B2B tech company. We provide smartphone-based telematics. So we work in the mobility industry. We work for car insurers, but also for other actors in the mobility industry, like car dealers, mobility providers, fleet management companies. The approach we have is so we help our customers build connected insurance products, so telematics. In the past, the telematics insurance use cases were a lot of the times built on additional hardware, and the value proposition is very often based on a reduction of the fee, of the premium. We think connected insurance is much richer than that. You can have a small value proposition at different point of contact with the customer. And concerning the hardware, so we use the smartphone because the smartphone already has a lot of sensors. You have a smartphone in every car. So you can already do a lot of things in improving the knowledge of your customer and connecting with it along its customer journey. So we started 3 years ago. We are based in Paris. We have about 20 customers, B2B. The biggest insurer we work with is Maif. We have developed with their subsidiary Altima a pay-per-minute insurance. But we also work for other big companies like Nissan, Total, in different sectors of the mobility.
Thanks for this insight and quite interesting positioning, being the only one on stage having a very tech focus, meaning enabling incumbents to be very specific and address very specific part of the market, car insurance in your case. That's a direct link to the first question on distribution and the challenge. So how do you see, all of you, the opportunity to find the right balance between direct distribution, indirect distribution, and do you think that focusing on one specific market have an impact on that split between the direct and indirect? Maybe to start with Tanguy.
Sure. So I'm really focused on large corporations, and for large risks, the main distribution channel is through brokers. So we work a lot with brokers. That's allies for us, and we want to become their preferred partner. And it's a way also for us to reach scale very easily. So basically, we can count on the large brokers, Aon, Willis, Marsh, to generate premiums for us, and it's easily to replicate successes from one country to the other. So the geographical reach is really achievable through brokers for us. Then there was a second question, I think, more on the vertical. I think our vertical is really climate risks, weather risks. It's a big chunk of the P&C market, and climate change is probably the biggest challenge for reinsurers and insurers at the moment, within low interest rates. So even if it's, I would say, just one vertical, it's a very big one. And it's a big chunk of the total premiums in the market. So include everything related to floods, to excess of precipitations, to droughts, to snowfall, to cyclones, to lack of wind speed for wind farms. So it's a very large vertical.
Thank you. Soren, on your side, you mentioned that you are covering all the value chain. So how do you engage with the incumbent, especially on the distribution side? Are you doing only direct or indirect or a bit of both?
So I would say in the testing phase, we've done a little bit of everything, but I think the sweet spot is very clearly the positioning as a partner of the broker. Yeah? The business model is basically 50-50, getting commission as a commission share with a broker or a software fee from the insurance. But a little bit like what We Group told before, once you win the broker and once the broker wants to work with you, then you also have a good case for winning the insurances, and that's very much the case on our side. And to your point about going vertical, I think also in our industry, pension is huge. Yeah? So if you want to be broad across everything, then you don't capture pension in the right way. And I think what I didn't realize moving out of Denmark into the German-speaking region was pension is fundamentally broken in most of Europe. So if you take the well-functioning country, for me that would be like Scandinavia, Holland, Switzerland, or UK, yeah? You have classical insurance sales. You have people who sell pension to companies, and once you win a company, you also automatically win the employees because there's automatic enrollment. But in the most other parts of Europe, and this is a broad generalization, once the broker in the classical sales way have won the company, he doesn't automatically get the employees because the employees often doesn't have an automatic way of getting enrolled. So you only get the 10% who are the most conscious, but you miss the other 80 to 90%. And that's why I think going vertical, understanding, let's say, the problem in, I would say, half of Europe, which is very vertical specific and doesn't even apply to all of Europe, I think makes sense because it's still a 50 billion euro market.
Definitely interesting, because both of you are relying, let's say, on existing distribution channel when you mention brokers. Raphael, on your side, are you relying on existing distribution channel? What's the split between direct and indirect? And I know that you are leveraging new distribution channel. Can you say a bit more about that part as well?
Yeah, sure. I think the first thing to understand is that as we're targeting millions of companies, it's a very different approach than targeting big ones where there are fewer people to address. So we really have to find efficient distribution channels to kind of get scalable, scalable distribution. And we are obviously offering our product directly to customers, but we're also offering this through in the places where our customers must be because it's mandatory. So their invoicing platform, potentially their banking system, every place where we can connect more directly to our customer and improve the experience and improve the data that we will acquire are, I think, the most relevant distribution channels for us, and that's what we're focusing on and integrating currently with some of these very recent accounting softwares, is to put our product very directly in the hands of our customers where he's already engaging, rather than creating necessarily a new way to bring him on board.
Yeah, and perfect transition with the second part on maybe data, because as you mentioned, you rely on mobile data, which is quite interesting, especially for telematics, because usually you have a hardware piece to put in your car. You are not leveraging such external pieces. Can you say a bit more about how you gather data and why you think that insurers are leveraging your solution instead of doing it on their own, and why you think that not relying on a hardware piece is a competitive edge for you?
Well, for the last question, where, of course, distributing a hardware piece is painful. It costs a lot of money. One advantage, to come back to the distribution part, one advantage of the smartphone mobile app is that you can create a connection very early with a potential customer. And for example, what we do, one of the apps we have with Maif is targeted towards assisted driving student. So it's before you have your driving license. And the app just provides an automated learning booklet. So that creates for Maif a link with the customer even before they have a license. So we are working with similar projects with driving school networks. And this is a good illustration because you can, with a mobile app, because it's not expensive to deploy, you can create connections with potential customers very, very early, and then use that to propose insurance. Because at one point you have a lot of information about the customer, and you can use that to be relevant in your proposition.
Yeah, and that's a real challenge, let's say, for incumbent to access those new data set, because at the end of the day, you mentioned you are all on big markets that are addressed, either not addressed, first option, or addressed in a different way. Raphael, you mentioned that you are targeting kind of small customer, meaning that you need to serve millions of them. In terms of data set that you are leveraging, or in the process of underwriting, where do you see the most, let's say, challenging part for you, and how do you see you are way different and doing way better than incumbent could do? Meaning, what's the competitive advantage around data that you see for a moment?
So obviously this market is very data driven, because the economics are driven by fraud and defaults. So it's our business model is a classification problem where you want to get people that end up paying and avoid the two others, fraudsters and defaults. So the only way to get there is to understand as much as possible these small businesses and understand them better than what I would say traditional ways of underwriting can provide you, because it's in general based on, let's say, kind of old financials aggregated. So you need to get to the fresh and granular data to build your model and be very specific about what's happening currently in that business that are much more volatile than bigger companies. If you look at Pernod Ricard a year ago, it looks pretty much like Pernod Ricard today. If you look at a small business, it has changed. It can change dramatically in a year. What we're building today with our partner Euler Hermes and leveraging their data and their score to get to this underwriting and improve every day, adding more criteria, more specific data, and get to the, let's say, the biggest addressable market that we can get. So we're in the process of improving this, but obviously we're already leveraging the couple of years of experience they already have on underwriting on these small businesses, and it's very useful for us. The idea obviously is to leverage within those distribution channels that I mentioned this very specific data to get to the more the more details, the more specific as we can.
Okay. Tanguy, could you share a bit more about yourself as well? Because data is all about your business, or your business is all about data. Can you say a bit more and give some perspective, as Raphael mentioned, on how you leverage data and why and how you manage, by the way, to access those data, if insurers could address them as well, and then why you manage to do so, whereas incumbents can't?
Sure. So for us, insurers are risk carriers, so definitely we partner with insurers, so they are not competitors, but we have access to lots of data. So if we look at the insurance industry 10 years ago or 15 years ago, there was a strong barrier to entry due to the fact that historical players had lots of historical data for 50 years, for a century. Now if we look at all the new data sets, they tend to be much more powerful than the historical data. And in some cases, so if we take, for example, natural catastrophes, it's good to have a stochastic view, so to look at the past and try to understand what's happening, but you can do that through also a physical approach. So if you take into account, for example, sea surface temperature, wind shear, and other parameters, you can be much more powerful in assessing your risk than traditional insurers. And of course, we use lots of satellite imagery. So we are incubated by the European Space Agency. So we work with data from NASA, from ESA, from JAXA in Japan, from Chinese players. We also work with IoT data. So typically on, for example, on hailstorms, which is a big topic in the insurance world. We tend to use algorithms that insurers do not use or are not used to produce, to code on their side. So for us, it's just the beginning of a long journey. And I would say the number of data sets that we can use today is probably only a small share of what we will use probably in the next 5 to 10 years. So we really want to focus on all the intelligence, all the algorithms to extract value out of this data to improve, again, the customer experience and also how we price the risk.
And does that mean that you plan to leverage more data set for the same risk, or do you think that having more data set available will enable you address new risk? Because beyond weather insurance, you mentioned parametric insurance.
Yes.
It could be applied to other areas?
We do both. So basically, it's true there is a new market. So companies are trying to hedge some of their weather risks. It was not the case 5 or 10 years ago. Again, because there is a factor of 4 to 5 for some risks over the last 50 years. If I take, for example, drought, heat waves, or cold spells in Europe, it's really a multiple of 4. So they want to buy something that they had not bought in the past. But also, parametric insurance is a way to improve existing insurance products. So basically, you can improve the economics because you can get rid of claims handling costs. So usually when you give 100 to your insurer, you get 70% in return. So it means that the industry is very inefficient. There are 30% frictional costs. Through parametric insurance, definitely you can reduce and save probably 30% of the expense ratio. Then it's a shame that when there is the moment of truth, there is a claim, you need sometimes to wait for 18 months. It's more or less the average time you need to wait for in the corporate segment. If you can pay within 5 working days, then it makes a big difference. So we are working both on a new market created by climate change, unfortunately, and on cannibalizing the existing market through better customer features and more data to also make sure that insurers are making some money out of it.
Okay. So that's why you mentioned that you are partnering with insurers and not necessarily competing with them.
Yes.
Okay, that's really clear. Soren, on the pension market, so is that the same, or in terms of data, because you are, on, as you mentioned, on an existing market, big market, at the end of the day. So how it works for you?
So I think whereas data is a big differentiator for you today, it is absolutely zero differentiator for me today. but it is my plan that it will be over time. So I have a pretty simple business model. Step number one is getting companies and their employees onto my platform. This is mainly a marketing game, so we become very good at analyzing marketing data, but I would think this is, in the data world, pretty simple. So I would say data is definitely not the differentiator here, although it can make, you can be better. It becomes more a matter of automation. The second step is to make sure that employees save more. Yeah? So for us, it's all about now in this first step to actually get the employees on and build the data sets ourselves. Because in terms of getting employees to save more, increasing their savings rates, it's very much about hitting, or let me say, talking to the employee at the right point in time. And the better data sets we have, the better we will be able to do that. So for me, it is a capability we don't have, but it's very clear on my capability roadmap for step number 2. And step number 3 is to sort of add more pension-related risk products to the channel, which of course will only go with data. So long story short, data doesn't really make a big difference for me today in the success of the company in the next 2 years, but it's very clearly on the roadmap to build up data capability, but from the data sets that we build ourselves. And right now, I don't see from any of my partners that I can tag on to relevant data sets to get more speed, but I'm for sure gonna try.
Interesting that you mentioned the future of your company. Philippe, on your side, how do you see the future? Because the car insurance market is expected, let's say, to change dramatically. We discuss a lot about autonomous cars and so on. As you are partnering with insurers on that very big market, the car insurance part, how do you see the future for yourself, leveraging those data? Do you think that, as Tanguy mentioned, you can address new kind of business lines, or how do you see the next step for you?
I think it's something that is very important is being able to build an ecosystem, because of course the future will be connected. But when your car is connected, that means that there are opportunities at every step in the journey of the mobility of the customer. So the connectivity helps different types of businesses. Insurance is one of them. But what is important is who is going to own the connectivity. So is it going to be the car manufacturer? What we see is that most of them, they want to be the main player in this game. What we see also is that the first car manufacturers that have opened some kind of data, well, the cost is quite high, so the business models will be complicated. And what we see also is that the innovation will not come from the insurers, so they will need to have a technology. So again, we think being able to collect data with a cheap way, in a way that is not too costly, and that is integrated with other services, because you collect data if you provide services. So the customer needs to see what he gets against the data. Well, building the ecosystem, having partners, car dealers, driving schools, mobility providers, and insurers, I think it's very important.
That's interesting, and I guess that this is related to your very strong focus on one product that you managed to build such an ecosystem. Back to you, Raphael, this is exactly what you mentioned earlier, relying on distributor and this kind of ecosystem. Can you say a bit more about the vision that you have for the next months in terms of maybe building an ecosystem around your product, or do you see much more scale in terms of geography, in terms of maybe offering other products to your existing customers? So how do you see the next step for Moment? Though, as you mentioned, you are quite early in the journey. So you mentioned that you are very focused on delivering. But anyway, what's the next step for, again, a very focused insurtech player?
I think on our side, it's pretty clear that our focus is cracking right now the market, the distribution, and improving the risk and fraud side. So we really want to focus specifically on our offer, which is like supporting these small businesses on late payments. We don't think that adding on top of this other services would be beneficial for us. In terms of geography, I think, once again, we want to focus on the French market right now, and we will test in a couple of months just to see, and we think it'll not be too difficult for us to go into other geographies because of our partners, etc. But it's really focusing on these things: data acquisition, distribution channels, and once we've cracked it in France, we'll go in other countries, and for the rest, we don't think we can add that much value right now, in going into other spaces where I think very strong players are already operating, or adding new services that we're not specialized in. So as we're addressing a major and very big problem, we have a lot of space, and we're focusing on it.
Okay, interesting. And you, Soren, you might have heard that everything around pension has evolved a bit in France. Do you have any plan to scale in France? Do you have any plan to move geographically, option A, or do you think that you can maybe broaden your scope in life insurance more generally? How do you see the future for your company?
So for me, it's geography first, and then product range second. So we are in Austria. It's a great country, but it's a small country. And clearly, when you speak German, there's another country which is a little bit bigger. So that's where we're entering this year. So basically, our focus this year is we are working now with 3 of the biggest pools of brokers and insurance salespeople in Austria. So it's all about scaling in Austria. The proofs of concept are behind. And then the focus is entering into Germany. And that's kind of, for me, the horizon the next 12 months. And I would say that is real, and everything beyond that is kind of fantasy from today's perspective. What comes after that, for me, is the question, is it Italy, France, or Spain? For me, personally, it would be naturally France, because I've lived here for 2 years and I understand the country better. But right now, at this point, I could not say with high certainty which of these 3 countries is the better. And it may also be opportunistic.
Okay, makes sense.
And I think in terms of growing on product side, that will come along. But now it's all about getting users. Yeah. And adding products will come at some point, but it's unclear when. Okay, makes sense. Tanguy, maybe a question on your relationship with incumbents. So you mentioned insurers and reinsurers. We see more and more reinsurers working directly with insurtech player. Do you see, based on your background, do you see any difference in working with insurance player and reinsurance player, and with whom it's easiest to work with? And is there any pattern in working with those players?
I think that there are pros and cons working with reinsurers. They tend not to have licenses, so you need fronters, so you need basically insurers to work with reinsurers. There are a few exceptions, so some large players are able to do both. But reinsurers tend to be more technical, so basically they will understand the complexity of a model, and they will, of course, understand where you are heading to. I think you can also mention ILS funds, so asset managers, because today, if you look at the P&C market for large risks, for the reinsurance business, 25% of the market is actually owned by insurance-linked securities. So asset managers putting some of their assets into the insurance space, basically because it's decorrelated from the financial stocks. So, and we are also working with ILS funds because they can provide capital with very low costs.
Okay. Thanks. And Philippe, jumping to you, do you have any discussion with a reinsurers player? Because you mentioned several insurers with whom you are partnering. You mentioned ecosystem, you mentioned car manufacturers. Is there any reinsurers that would make sense for you to partner with?
We have discussions, but for the time being, it's not more than that. I think it's players that are very interested in having data. So we can see that some of them look very closely at telematics, but not for us for the time being. Yeah.
Okay. And you, Raphael, you mentioned your relationship with Euler Hermes, and it seems that it's not just, let's say, insurance capacity. Do you have the opportunity in the past, let's say, to engage with a reinsurance player? Do you see them as potential partner? Again, if I just take an example, Munich Re, end of last year, said that they want and they will push towards working more and more with insurtech player. Is that something you see on the market, and do you think that could have an impact on your own business, or working with one insurer or one reinsurer is the same for you?
I think it's for us. We really think we have the best partner around because they're the leader in their market, and we need in terms of trade credit insurance, you need more than just underwriting capacity. You need understanding. You need of the industry. Obviously, you need collection business. You need a lot of things that you can't just go to someone else and say, I want to underwrite the same risk there and there. So we really want to nurture our relationship with our partner today and leverage their major assets worldwide to kind of scale our business globally, rather than trying to find more insurance or reinsurance companies and kind of get into a competitive landscape on the insurance side. So we're really focusing on making a successful partner with Euler Hermes right now, rather than leveraging other companies.
Okay, interesting. And by the way, back to the very focused market on which you are, all of you, seems that it makes sense to go to the right partner, and it's not about, maybe that could be the conclusion of the panel, it's not only about, let's say, underwriting capacity, but it's much more than that, especially when you are addressing a market that you try to address in a new way. Thanks to technology, I think that this is exactly what you are doing on trade credit insurance. Thanks a lot. This is the end of the InsurTech track. Thanks. Please give them a load of applause for those 4 panelists. Thanks a lot.